So my question to you is, John, what led you to launching an ETF that tracks insider buying by corporate execs?
I would say that it has always made sense to us at the firm. Way back, decades ago, we would get the monthly summary of insider transactions as a paper thing sent to us by the SEC, and we'd go through it page by page and come up with ideas. It just made sense that the people who are running the business should know much more about it than we do, and that when they get off their fannies and open up their wallet to buy the stock because they think it's an opportunity, they're not buying it to lose money. That's not their intention. They think the stock will go up. So it's always that logic has always appealed to us, in addition to the fact that insiders running the company can make things happen. They can, if they have a fast-growing division, they can spin that out. It might improve the overall value of what's left and the thing that's spun out, or they can sell the company. They have frequent communications with investment bankers who know how to value businesses. They know comparables, companies in the same field that have been sold, and they have a much better idea of when their stock is cheap than most people. So that was the kind of the initial motivational aspect. And then I got very interested in academic studies of insiders, and there was one that was very sort of foundational for us in terms of what we have done subsequently. It's a book called Investment Intelligence from Insider Trading by a University of Michigan professor, Nehat Sehan, and he wrote, in this book, he includes his studies which began in 1978 and ended in 1993 of top executive insider purchases. And when they made a purchase, he measured the valuation, some valuation aspects, characteristics at the time of the purchase: price to book value, dividend yield, and PE ratio. And he found that when top executives were buying the stock at the cheapest quintile, the cheapest 1/5 of stocks ranked on price to book value, price earnings ratio, highest dividend yield, that they tended to beat the market. And they beat the market in this study by 10 percentage points versus the benchmark. And wow, that really hit us. Look at that.
And I might add that Hedda Nadler, who represents Tweedy Browne, is a financial PR person extraordinaire, has just passed out a paper with this research for all of you to read, take home and read. But so it doesn't just stop there. There is a lot more to this process that led Tweedy Browne. I think you had told me at one point that you had studied this phenomenon for 15 years before you finally decided to launch Copy.
Exactly.